Hi, I'm Vince Molinari, and welcome to FinTech TV. We're broadcasting from the iconic New York Stock Exchange, and I'd like to welcome Chris Rowe, who is the CEO and founder of True Market Insiders, as well as the Chief Investment Officer of Avalon Invest. Chris is the founder of the first fintech investment research and media publisher for the age of AI, True Market Insiders, a highly respected sector analyst and creator of a rules-based algorithmic investing model for institutional and individual investors. It is my delight to welcome Chris to the show today. Hi, Chris. Thanks for joining us today.
Great to be here. Thanks for having me on this day when the Federal Reserve decides to do nothing.
Wow, what a lead-in already. We're breaking right into it. Hey, Chris, tell us a little bit about True Market Insiders and why you started it.
We wanted to make it easy for individual investors and institutions to invest. It's easier to follow where the money is going first. You always see it in the price behavior before you see it in the news. So that's been our motto, and it's why we launched True Market Insiders.
So giving a little bit of an edge, if you would, to undiscovered value, or how would you characterize that?
Well, institutions sneak trillions of dollars into sectors, hopefully without anybody realizing it in the beginning. And what we do is we have algorithms that basically detect when they're doing that. So a lot of people trade based on the story, what they see on television. By the time you see it on TV, it's too late, right? So the first thing we do is we follow where the money's going, and we end up looking like geniuses because we end up reporting after we see where the money's going. We dive into the news that nobody's looking at, nobody's paying attention to. We report on that, and it looks like we have some crystal ball or something like that.
Well, I don't know about crystal ball, but great intelligence to be there a little bit early before the crowd and getting the benefit of that alpha capture. Chris, when you look at some of the most important things that investors should be looking at these days, give me some of your insight there.
Probably the biggest, most powerful trend right now is going to be the fact that interest rates, after going parabolic into the first or second week of March, dropped. Of course, there was Silicon Valley Bank going out of business, and I think everybody's attention moved away from inflation at that point and started thinking about the future when the Fed starts to drop rates. And that's why you see technology stocks absolutely gunning higher, because you have lower rates. It's going to show up in technology stocks first, among others. And right now, if you look at precious metals, it's one of the only sectors of the stock market that has supply and control. It's one of the only sectors that's being sold right now. Usually that's a hedge against inflation, right? So nobody's looking at that. Out of 41 subsectors in the market right now, all but 4 have demand and control. Institutions are buying a lot of stock.
So a lot in there I want to unbundle in a short segment. So. No, it's great. I want to try. So we talk about interest rates. You kind of alluded to in the top of the show about the Fed pausing today. Lots going on. Let's assume a pause today. You truly think we're going to see a drop of rates after that?
Of course you will. They've gone too far. They went right up to the line until something breaks, and they broke the banks, and then they're going to pull back. And the market's going to trade based on what they think is going to happen in 9 months from now. So, of course, it's Joe Sixpack's going to continue to feel inflation and think about inflation every day. But market participants are not thinking about inflation as much anymore. Now they're thinking about how to jump on the AI bandwagon. They're thinking about the presidential election coming up. And right now, we're at historic levels of complacency in the stock market. If you look at the VIX, it's very, very low. It's a crowded trade. Everybody's been talking about the fact that there's 7 major mega cap tech stocks that have been keeping market indexes higher, right? Everybody thinks as soon as they roll over, the market's going to crack. And I was in that camp up until about a week ago. But now you can see the market really starting to have legs. Small caps are taking off on big volume. Small caps lead the market higher. So I'm taking the other side of the trade. It looks like we're probably going to have a pretty strong summer.
Yeah, I think it maybe caught a bunch of people, including myself, by surprise when you talk about the crowded trade. Maybe looking a little bit differently and breaking out of a bit of this trading range. And does that represent a bottom? What are you thinking there?
I think that it's a tale of 2 markets. I think everybody has to look at maybe 2 ETFs, SPY, which tracks the S&P 500 large caps, and IWM, which tracks the Russell 2000 small caps. And remember, IWM is the real market. That's what's really happening. And IWM was not able to get off of its lows after we hit the October low for the S&P 500. So large cap stocks and mega cap stocks pushed higher, but the real stock market, IWM small caps, could not make it off that low. But just in the last week, we saw not only an explosion higher, but follow through. And that's really important because people thought that perhaps when the debt ceiling was raised, people thought that perhaps it would just be a short covering rally. They're waiting for that rally to stall, but there's nothing but follow through. And like I said, we have all but 4 sectors of the market right now gunning higher. Institutions are buying the market right now.
That is truly great insight when you look at the institutions buying. We're in advance of a big Russell rebalance next week. Talk to me, what do you see? Volatility, flat? How do you see things percolating?
Yeah, that's a big topic. I think there's going to be huge volatility coming up, and I think investors just want to stay 2 or 3 steps ahead of that. You know, don't get caught flat-footed when the volatility happens. Don't run around frightened. Wait for it, right? Lick your chops. I can't wait till the volatility hits the market because people want to buy NVIDIA right now. It's breaking highs, right? So people are going to chase it on the way up, but you're going to get huge volatility. And also, what happens if Trump comes in? There's going to be speculation about Trump. Remember what tech did when Trump was in office. The entire time, technology was the strongest sector out of all the sectors. This year, semiconductors, and I'm making this call right in June in the middle of the year. For the rest of the year, semiconductors is the strongest subsector of 2023. I made that call in November, right after the midterm elections. You saw semiconductor stocks just gun to the top of the rankings, and that was a real telltale sign. Every time there's a presidential election or a midterm election, just watch what the sectors are doing, and if you see semiconductors run to the top, it's probably going to be one of, if not the strongest sector for the next year. And that's what we've seen. Ever since we made that call in November, we've seen semiconductor stocks leading the market higher.
So how does True Market Insiders uncover all this? What's the process? Or is that too much secret sauce?
Not at all. It sounds complex at first, but I mean, what we have technology that makes it super simple. So all of this data was available to institutions and insiders, New York Stock Exchange people. It's always been available, but not to individual investors, and not in a digestible way. We meet individual investors where they are in their understanding of the market, and we bring them into a very simple framework. It's just categorization method. It's just watching the market in terms of sectors. People think about the stock market. What's going on in the market today? And they say the Dow is up 200 points. It doesn't mean anything. You want to know what individual sectors are doing. So what's technology doing? What's utilities doing? If you could just look at the market in terms of sectors, everything suddenly becomes very clear. And the stock market, you can break it into 11 major sectors, nice and simple. So it's an easy learning curve.
Easy said for you, not for me.
Well, if you're looking at 11 sectors, it's easy. If you look at 41 subsectors, it starts to get a little more complicated. So semiconductors is a subsector of the major technology sector. You also have computer stocks, internet stocks, and software stocks. And you know, we gradually teach people a little bit at a time. We do the slow boil method for people.
Slow boil, I love it. Let me come back to, you alluded to gold earlier, right?
Yeah.
You know, so give me a little deeper dive on your thoughts, gold stocks. Is this an avoid? How do we think about that right now?
I'm having a hard time myself. When I look at precious metals, this is a sector that I've been bullish on for quite some time. But one thing you want to do as a trader is you never want to really dig your heels in on any stance that you have. You have to be willing to let go of it. Precious metals is suddenly one of the only weak sectors there are in the market. You also have utilities, electronic, utilities, gas, and these are flight to quality sectors. You also have food. Food and beverage, right? These are all flight to quality sectors that I mentioned, and those are the only ones that have supply and control right now. So when I look at precious metals, I was bullish on it a week ago. I can't say that I'm bearish on it right now. I'm not just going to reverse like that, but it's telling you something. It's telling you supply is in control, and it's also telling you that the market's not that worried about inflation anymore. So when you're tracking sectors, it's not just trying to find the strongest trade or the best trade of tomorrow. When you're looking at sectors, it's a message that the market's giving you about what to expect in the future. For example, it's telling you that investors aren't too worried about inflation anymore. When you see precious metals pulling back, it's no longer of interest to institutions.
So let's go to a little bit of the upcoming election cycle. Is the market telling us anything yet? Too early? How do we factor that into the decision process?
Well, first of all, I think there's a big missed opportunity. Everybody's frozen right now. There's several things at work. You have the China-Taiwan geopolitical situation that Dylan Jovanet was talking about earlier, Dylan Jovanet from Behind the Markets. You have the presidential election coming up, and you have artificial intelligence, which nobody really knows what the hell is going to happen with that. So we're entering kind of a world that we've never seen before, and when there's indecision, people, especially with individual investors, they're afraid to invest right now, but that's when it's the best time to step in and invest. So I think we're doing this interview at a perfect time because we're seeing a market that has turned around. We got confirmation that it has legs. We know semiconductors is a very strong sector. I think while everybody's frozen right now, not knowing what to do, this is exactly when they should be going in and buying, especially AI stocks. There's some very little known AI stocks out there that are trading in the single digits that I think are going to be 20, 30, 50xing in the next year or two.
Wow, that's a big move.
Yeah.
Talk to me a little bit, great new addition. You have Tobin Smith joining.
He's the AI man. He's the AI master.
That was my little segue. You loved
Sorry, go ahead.
Weave that in there.
Here, you're the guy. You're the man. Let's let you do that again.
No, that's perfect.
He's the master of AI. He knows everything about AI. If you want to go to one analyst who's also a money manager, who understands risk management, a guy who has a direct line to the White House and is a super connected person, he knows exactly where to invest your money for AI. So artificial intelligence, he's going to be, you'll see in 5 or 10 years, he's going to be the Abby Joseph Cohen of the internet days. You remember when you were looking at Yahoo and it was trading at $2 and then $3 and then Qualcomm went up and split 4 or 5 for 1 and then ran up again. That's what we're looking at right now with AI, and Tobin Smith is the guy to follow.
So we can turn back the clock, have a redo, my mulligan if you would, and we've got Tobin Smith and AI.
The thing about AI is that it's going to clobber some industries, and industries you don't even think of, and it's going to make other industries more efficient. And food and beverage is supposed to have a compounded annual growth rate of 46% for the annualized for the next decade, which you never would think. Food and beverage, nobody thinks about that. When you focus on sectors, by the way, right now the strongest sector in the market, semiconductors is second place. The first one right now is pollution control. Who thinks about pollution control stocks? Nobody, but if you follow sectors, you see where the money is flowing. I mean, you can just look up in the sky and you see that New York City is under a dark cloud because of fires in Canada, right? So nobody thinks about investing in pollution. But it hit the top of our rankings. So right on our homepage, you've got pollution control as the #1 strongest sector. But AI is a sector that, even though everybody's talking about it, nobody really knows what to do about investing in AI. So you have to be careful when it comes to AI because, again, there's some, Match.com, there's, drawing a blank right now, but there's different stocks and industries that AI is going to crush, and you have to be careful about which side of the market, which side of the trade you take.
So Chris, we talked a lot about different sectors, going a little bit deeper. Give me your macro view. What should investors be looking at for the next couple of months, or in fact, the next couple of years?
Yeah, that's a great question. For both time frames, I'd say the presidential election. All right, that's the very next thing that people are thinking about. The thing is that there's always a bull case and there's always a bear case. It just is a question of which story has the volume turned up loud at the time until the next one resurfaces, right? So you've got 3 big stories right now. You've got a super bullish story with AI. Right? You've got highly volatile story with the presidential election. One of the most volatile times that we've had was back and forth between whether it's going to be Trump or Hillary that gets elected, and you had a lot of leadership back and forth, changing hands. So you've got AI, you've got the presidential election, and you've got China and Taiwan, of course. It's kind of the wild card. So you've got a big fear play, you've got a big bullish play, and then you've got the volatility play with the presidential election. And the volatility play, I think, is the most exciting because what you get to do is make a shopping list today. You know that volatility is going to hit. We're going to probably have record-breaking volatility very soon. The market's poised to do that if you look at all indicators across the board, sentiment indicators especially. And when the market does sell off, you better have that shopping list ready because there's going to be some stocks that you've been dying to buy. As soon as they get smashed, you don't want to run around with your hair on fire. You want to buy those stocks.
Be prepared before the storm. Well, Chris, we close out. Little shout out. How do people find out more about True Market Insiders, Tobin Smith? How do we continue to follow you all?
I'll bet if you Google us, you'll find us. But truemarketinsiders.io, tobinsmith.io also. Tobinsmith.io is where you're going to find the master of AI. So big shout out to Tobin.
Perfect. Chris, thanks for joining us today on FinTech TV.